morning, but I guess Peter will help us break this down.
Peter will help us break this down. In fact, let's bring Peter McGuire on as well. We've got Peter McGuire, the Chief Executive Officer of XM Australia, joining in. Peter, we're trying to parse the data that we have right now. What are you making of the latest with regard to the Fed minutes, of course, and the trajectory of bond yields and what it means for global equity markets?
Well, good morning, Alex, and greetings from Sydney, and Happy New Year to everyone. You've got it. Certainly, it's a pleasure to join you. Look, I'll tell you what, I think the market's a little bit, while they're hawkish, and I took on board Niraj's comments, I'm also, there's one of, when is the rate cuts going to actually get traction? And this is the thought. The investors and traders are saying there could be 150 basis points this year. Fed's saying 75, somewhere in the middle. And when do we see blast off? Is it by Easter? Is it going to be in March? So I think we've just got to get through this first month. I'm looking to see how NFP hits the market tomorrow night, non-farm payrolls, and a couple of other moving parts, where the dollar is, and let's see if anything happens as far as US equities over the next couple of weeks. So, yeah, there's plenty of issues that we're going to take on board and really, get an idea of where we see movement.
Peter, good morning to you. I believe it's still morning in Australia. But do you reckon that this is more a temporary shift in a sentiment which might last for a day or two? Because the overarching theme or trajectory seems to be lower inflation, lower economy, and lower yields. Sure, the minutes could spur the yields higher for a day or two or three, but the overarching trend is still lower?
I think so, Niraj, and I think that's exactly right. You know, you'll get little bumps in the road, and let's see what happens over the 48 to 72 hour window. But yes, the overall theme, I mean, they're conscious as far as where inflation, it's certainly heading in the right direction. You've been also assisted globally with cheaper energy markets, so that's helped from a consumer standpoint. And then this is all going to feed into, naturally, I think, investors' appetite to take on risk. What's happening in this first month will be interesting, remembering we had that huge rally November and December. No one was going to sell because of the tax implications in April. So if they're going to sell, they're going to sell this year. And that may be a little bit of profit taking and people see other opportunities. So, yeah, it's going to be a really nice run up. I think the first quarter will be quite dynamic. And so, yeah, strap yourself in. It could be a lot of plenty of opportunity for traders.
Hi, Peter. It's Samina joining in as well. I want to move on to the dollar because that has seen a very sharp gain as well over the last couple of days, close to levels of 102.5, maybe slightly higher. How do you trade the dollar right now? Do you think further gains are on the lines with tension, of course, on the Red Sea, Fed rate cuts not coming as soon as the markets were expecting? How would you play the dollar? Would you consider going long at these levels?
Well, I think so, Samina. Lovely to see you. And I feel as though that push to the upside, it's got a little bit further to run because, as you just said, as far as Fed, let's see us, with the sell-off as far as some of the other currencies, there's been a nice really push that on from a currency trading perspective over the last couple of days has been very, very strong. So, yes, I think possibly a 103. Let's see if there's any thought as 103.25 in the short run. Maybe by, Tuesday next week, there's every chance it could crank that sort of number out. But, yeah, it's been a dynamic market over the last couple of days and it hasn't disappointed since Christmas as far as currency trading at all.
Absolutely. The last point that we want to talk to you about is crude oil prices. And we've seen that they've not gone up as much as one would expect in a normal situation when you have so much geopolitical tension. And overnight as well, a lot of headlines coming in. The Houthis attacking another container ship. You have the US and its allies talking about repercussions of that. What are you making of the moves in crude right now? Where are we heading?
Well, I tell you what, it's been very range-bound. Really, we haven't seen explosive moves. It's had a big move overnight, up a couple of percent. But look, it was pushed down. It's been whipsawing and it's been very, very choppy. So that needs to be considered. You've got 78.60 for Brent. I'm just looking on my screen, 73.12 for WTI. So, yeah, look, it's been range-bound. I think the smart, when it went to US dollar, they pushed that up. Crude's taken a little bit of a back seat. I really would have thought that, something as far as the Houthi situation would have pushed crude higher. So it just goes to show that unless you see something dramatic happen in that Red Sea, and that choke point around the Gulf of Aden, then maybe, we've just got to wait and see how it all plays. But look, there's every chance that will create, I think, further upside. But it just really depends on, geopolitically and whether they contain this or it runs out of control.
Much, Peter, for joining in, giving us that perspective. Always a pleasure speaking with you.